What's going on, guys? Thank you very much for joining us on our first podcast video interview with someone that's a very close friend, but also an extremely close client of our company, Mr. Paul Jones, Managing Director and Partner within Bridge Logistics Properties, a part of Bridge Investment Group. Paul and I have been friends for a very long time. We've worked very hard.
Too long, arguably.
Maybe too long. Here we go. Friends since I think 2014 or 15. Tried very, very hard to do a deal together. Didn't get one done, and then got two deals done within about a year for about $120 million combined. So we took our sweet time together, and then we made up for lost time.
Yeah, it was a courtship.
There we go. Man, I'm really, really appreciative that you're here. I know that a lot of my network, my connections, are really interested to hear what you have to say, and I think a lot of your network will appreciate some of the things we're going to talk about. So we're just going to dive right in.
Yeah, this is great. Thanks for having me.
Where'd you grow up?
So very unusual path. Grew up in Newport,
Okay.
Southern California. Went to USC.
Yeah.
Moved back to Newport and got into real
I think
estate.
that's brave of you to take the path less traveled.
You know, I'm essentially a trailblazer.
Here we go. Yeah.
Yeah.
You went to USC, so I have a question for you. Did you choose industrial real estate, or did industrial real estate choose you? And I ask it that way because I got into commercial real estate completely by accident.
Mm-hmm.
The recession actually forced me to get into industrial real estate. So I probably watched way too much Boiler Room when I was a kid and thought that I wanted to be an investment banker.
Yeah.
So I asked, did you choose industrial real estate, or did it choose you?
It definitely chose me.
Yeah.
I mean, like you, I wanted to go into iBanking
Yeah.
and have the big finance role and the Boiler Room and the stock market and all that stuff that you thought you wanted to go into. But then growing up in Orange County, so many of my friends' parents were in real estate.
Yeah.
Now a lot of them were in residential development, right?
Yeah.
And so that's what I thought I wanted to do.
Okay.
Early on.
Yeah.
And then when I was in school for SC, I kind of specialized in or concentrated in real estate development with a background real estate finance. And so I kind of went down that path. I got away from the kind of what I thought I wanted to do with iBanking, whatever. And then that was 2006. So very similar to where we are now in the market. I mean, there weren't a lot of guys hiring. The market was starting to feel a little choppy and overheated, et cetera. So I ended up interning for a guy I grew up next to.
Where was that?
That was at Studley at the time, which is now Savills.
Yeah.
A guy named Jeff Cannon, who to this day is a great friend and mentor, but went to intern for him during the summer. Had a great experience doing all industrial tenant rep.
Mm-hmm.
He was the only industrial guy at Studley at the time. Studley was this big office, tenant rep firm based in New York, and
Mainly office, but tenant rep only.
mainly office, all tenant rep, no industrial. So this industrial platform that Cannon and a couple of the guys kind of started.
And that was like
was an
06,
anomaly.
06,
Yeah,
07?
that was like that was 06. Yeah,
Interesting.
and then had a good experience, so offered me a job, and I grabbed it. But I never wanted to be a broker. I mean, I always wanted to be on the principal side, but at the time there wasn't really any options. The PE firms weren't hiring, the REITs weren't hiring, et cetera. It was on lockdown. But in hindsight, it was one of the best things I did because you learn how to do all kinds of deals, right? You build relationships with all the institutional guys, and then my background was in finance, so I was kind of running numbers behind the scenes for a lot of the office brokers as well, and they would pay me a percentage on each deal.
That's smart of you.
So it kind of augmented the the runnership salary and augmented. In that period, I mean, it was so difficult to make money in 2008, 9, et cetera, that it kind of gave me a backstop.
That's probably why you and I get along so well, because I'm sure you and I both remember the Bear Stearns announcement right when we were young, making no money.
Yeah. Well, it's funny. I mean, my as a young guy in the business, my big industrial, tenant rep assignment that I had procured myself was 218,000 feet in Buena Park, and I'll never forget. Like, we were out for leases in September, October of 2008. Lehman crashed in September of 2008, and I was like, well, guess I'm moving back to my parents' house now. Like,
no way.
That was a lot of money to me at the time, but it ended up happening. And then full circle, that building that we put them into went up for sale. It was owned by a private guy in 2016 or something like that. And when I was at Duke, we ended up buying that building. So I was like,
no way.
It was great. But yeah, I mean, I think the brokerage, route gave me a great foundation. Kind of being the numbers guy and kind of parlaying that into the brokerage world definitely kind of helped differentiate. And, back then, the buildings that were on the market for lease were often also on the market for sale. Mm-hmm. And so we would take our kind of requirements, our tenant requirements, and we would try to create investment sales out of them, with tenants in tow and things like this. And so that's how I ended up meeting Duke. And when they opened their office out here, they think of as, employee 1 or 2 that they hired. So
I feel like the story is pretty typical, where a lot of young brokers automatically want to get onto the principal side.
Mm-hmm.
And either they view brokerage as some like evil necessity to make the stepping stone to get it, but it sounds like with you, and I would 100% agree, and I talk to a lot of young people about this too, I think if you want to cut your teeth and really understand the nuts and bolts of what it takes to survive in industrial real estate, you need to learn how to call a landowner.
You do.
You need to learn how to cold call a tenant and understand what they want.
Yeah.
Like, how much from your brokerage days do you take when deals are really hard to find, really hard to get to the finish line, et cetera? Like, how much of your old lowly broker days do you end up pulling now that you're managing director?
I think it shows up in a lot of ways, right? I mean, one, I was friends with a lot of the other brokers, so it made the conversations when I jumped to the principal side very easy.
Yeah.
I knew what they were going through, right? Like, it's very easy for, if you don't have that brokerage kind of background, to say, wow, this guy's going to make this much money on that one deal. Like, that's crazy. Yeah. But what you don't realize is it could have taken you 10 years to foster that relationship and win that assignment, right? So there's definitely a sensitivity there. And, I think brokers like the fact that I had that brokerage background, because it was relatable, right? Sure. Like, I wasn't, and at that time, early on in our career, like, you remember this, like, industrial was not sexy.
No.
It was not the belle of the ball.
No.
It was hard to make money. Landlords would oftentimes pay half fees. Yeah. They would jam you. 4% on 10-year deal was not heard of.
Right.
It felt like it was always a battle for commissions, and I just never did that, right? Like, I knew what you guys were going through, and it was very broker friendly, I guess you can say, and it paid dividends, because if you treat people well, just generally in business, if you treat people well, they'll want to work with you.
I 100% agree. I also don't think it's a coincidence. You tend to see the most active brokers, and a lot of times, even though a lot of people don't want to admit it, a lot of the most active brokers tend to do a lot of business with a handful of clients, buyers, especially at the institutional level. Mm-hmm. I don't think it's a secret. I think trusting relationships are created, and when you're a broker trying to piece a deal together that you may not necessarily have exclusive control over, you need to know there's unspoken trust or relationship, or I've been in the trenches with Paul before. This is going to be a really difficult deal. I don't have control. I don't have exclusivity. Who do I trust? Right? And I think that's, whether brokers admit it or not, it's worth its weight in gold.
I think so. I mean, look, we do a lot in the off-market world, right? And on those off-market deals, you might only get one shot, two shots. Yeah. And you don't want to waste a bullet on someone that's not going to do what they say they're going to do. That's first and foremost the most important thing. Can't see the forest through the trees, or understand where the puck is going in the market to pay the freight in a rising market. It's not always easy to stretch, right? At a conviction and a reason why. Yeah. And with I think that historical context of working together and trusting each other and all of that, obviously, plays into it. So.
Usually on these off-market deals, which thankfully you and I have successfully been a part of a couple the last year, debt's changing this, but normally when you change off-market deals, there's a frontier you have to go to from a value standpoint
Yeah.
that may not necessarily have been fully proven. And so coming back to trust, has to be trust between broker and buyer. The buyer's got to lean really heavily on the broker. This is the number I think we need
Yeah.
to get there. Can we get there?
Right.
And I know you and I have a very transparent relationship. If I give you the information, you're going to take it to someone else and need to stand behind it, right?
Yeah, my reputation's on the line,
Yeah.
right, on every deal.
Yeah.
So, I've really taken that to heart as I've kind of gone through my career, and telling you really quickly whether I can or can't do something is the utmost importance. You can give me guidance, and there's been times where I've been like, Chase, you're out of your mind. Like, there's no way I'm getting there.
Yes.
There's probably been more of those in deals we've actually made, but, I think it comes down to the last couple of years have been hard, right? Like if you've had a lot of buyers come into our space that typically weren't players just because there was nowhere else to put money, right? And that skewed the market, right? They didn't have the historical context or really knew like what was going on, and so the market got pushed up pretty quickly.
Yeah.
And I also think that without that historical context of, or for example, if there's been a pretty a historical spread between like the West IE and the East IE and South Bay and the IE, right? And so
you could compartmentalize.
You can compartmentalize it, but
Yeah.
you historically and just through experience of being around for a long time know what that trading band has been, like what that spread has been.
Yeah.
And so there's been deals that we've talked about or that I've done where it's okay, that spread is way out of whack. The East is way lower than the West. It needs to come up. It will come up, and you're kind of skating to where that puck is going to go. And we've gotten and that it's made for some great investments just because you've been around, right? And so I think going back to the trust as a broker, it's like not only do you know the guys and you friends and all of that, but you have faith that they know the market as well, if not better than you do.
Yeah.
And they're convicted in the deal, and you're confident in their reasons why.
So since we're on this topic, what would you say one of the biggest lessons that you learned cutting your teeth doing deals through the recession is serving you the best or the most?
Yeah.
Either right now as things are getting really turbulent, or what do you think is going to serve you the best as we go into a bit of a uncertain time?
Yeah, I mean, it's very relevant, and it is kind of funny how history starts to repeat itself a little bit. I mean, for the older guys that have been, through 3 or 4 of these, it must just be crazy. But, the one thing that stuck out to me during that time was the flight to quality. So tenants are gonna flee to the best buildings. Investors are going to flee to the best locations, the highest functionality. And we're starting to see that where, like, I think a lot of the discipline in our space, or I'll call it the basics, have kind of been ignored over the last couple of years, right? Where if you build it, they will come. It doesn't really matter. And a lot of bad real estate decisions have been bailed out just through, crazy fundamentals in our space. Yeah. But I think that's over. I think that, like you, I mean, I cut my roots in the business of understanding street by street, building by building, why it's better than the next. Yeah. And that's going to come to serve us in this moment, I think, where, functionality really matters. Yeah. Right? Location really matters. Durable basis really matters. Yeah. And, understanding why and seeing that, tenants kind of flock to the best of the best. And, when you have 10 options, is something that, is going to come back here.
Let's dive into BLP.
Yeah.
Tell us some background on Bridge Logistics Properties. And
yeah, so we've been here about a year now. And the partners of our business, most of us came from Brookfield.
Okay.
Bridge Investment Group is a big PE firm out of Salt Lake City. They're about $40 billion of AUM. And their business model is essentially to be the general partner to a lot of different verticals, each vertical being its own standalone P&L and product type. So historically, Bridge hasn't had a logistics team. And so a few of us partnered with them to start the logistics practice. And Brian Gagne, Jay Cornforth, myself, Connor Tamlin, all came from Brookfield. And it's been awesome. I mean, it was a way for us to kind of start our own company with having a great partner in Bridge Mothership as our kind of backbone of our business and our GP partner essentially. And it was even though we are sharing profitability and things like that, it was a way for us to not have to take all the risk in starting our own business, which you can obviously appreciate doing with your new venture and having to deal with things that are very far away from real estate, like benefits and
everything.
Exactly.
Everything not related to the business.
Keeping the electricity on in the office.
That's
space
right.
and all that stuff. So it's been fantastic. I mean, the Bridge culture is awesome. I just got back from a kind of leadership conference that we had, and everyone's amazingly nice. Values, everyone is just kind of that Midwest values, it seems like, right? So I'm really happy that we teamed up with them and are partners with them. It's fantastic.
What is your team's biggest focus right now? Because I know you and I have done a lot of business together, buying truck terminals, buying Class A sale leasebacks, et cetera. What's BLP's biggest focus, both Southern California and also nationally right now?
Yeah, I mean, the fabric of who we are is we're value add investors, right? And we've kind of carried over a similar strategy to what we've had in the past, where we're aggregating real estate in the highest barrier markets across the country, and we have boots on the ground teams in Southern California, Dallas, Atlanta, New York, New Jersey. And our partners and our deal guys are people that have been in those markets for a really long time, and they're able to unlock the off-market deals, which we feel like by not kind of having to go through the widely marketed process, you immediately create some value arbitrage, right? So for us right now, it's durable locations. It's defensible basis, not just relative to 6 months ago, but relative to the various call it times over the last decade of moments of kind of turbulence. And like I said, flight to quality. So high functionality. Tenant credit, right? We're kind of back to that mattering again, which I was kind of laughing with some guys the other day, and I think we've talked about it, but it's like over the last couple of years, that kind of didn't matter, right? Like, I hate to say that, and it sounds very cavalier, but if you buy a building that good functionality, good location, all of that, like the tenant's credit was kind of secondary, because odds are their rent was way below market, and if they did go BK, it's like kind of a windfall, right?
Well, then all you have to do is blink, and you've already got an extra like 15% of equity built in just because you bought it.
Exactly, and it's, as much as I hate to kind of admit that, but I mean, it's so far away from the fundamentals of just smart real estate investing, but we're back to that, right? Where it really does matter, and as debt is hard to come by, that matters to them a lot too, right? And so I think the reset was really healthy. And I think we're back to the basics here, right? Which, is hard to define what that is, because the market's still moving around so much. Right. But once there's stabilization in the capital markets, which hopefully we have here over the next few months, people are going to come back. Right, it's the uncertainty of what's happening with interest rates and inflation and all of that that's giving people pause. It's like just made people freeze, right? But once that knife kind of settles, then we're looking at the best fundamentals in industrial that we've ever had. And it's, people have to deploy money. People have to do things. So it sheds and beds, right? And so the money from investors will come back into the system. The fundamentals are still really strong. It's just, in this moment, it's just wait and see what happens.
Is there a large group of institutional investors that are more concerned about making a decision, it being the wrong decision? So are they more focused on seeing what their competitors and compadres are doing in the midst of this uncertainty so they can make a decision?
Yeah, I think so. I mean, there's definitely a herd mentality,
Yeah.
right? But no one made a lot of money just following the herd.
Yeah.
So I think our opportunity as a team is to be forward thinking and to get out in front of what's going to happen, and go and go and make some investments in the best markets, in very durable, functional buildings and all of that right now, right?
Yeah.
Maybe not right now, but before the rest of our competitors say, okay, it's safe to go back in the water now.
Yeah.
Right. I like to think that we are smarter than a lot of our competitors, and look, we're well positioned to do it. We have great financial partners. We're not being dragged down by 10 years of bad investments. We're a new platform.
Yeah.
So I think the opportunity for us is there. It's just a question of when is that right moment.
So you're in the middle of continuing to build and run this BLP team, right? Industrial is still extremely competitive. Interest rates are all over the place.
Yeah.
What's the first thing you think about when you walk in the office in the morning?
Nowadays, it's an interesting answer.
Yeah.
How do we bat the hatches down? Like how do we make the ship ready for the storm, right? Because I do think we're in a storm, and I think it's probably going to get a little bit worse before it gets better. If that's just my opinion.
Yeah.
And so, look, we've really been focused on getting our vacancies leased. We've tried to get ahead of lease expirations that might be looming in the next few months. Where before it was like, oh, it's just rents are going to continue to go up, right? So
stay, go, whatever. We'll find another tenant.
Yeah. I mean, you never went broke, having occupancy at a rate that was more than you underwrote, right?
Yeah.
So no matter what, I feel like
which around here in the Inland
you're
Empire,
going to win, right?
Next to nothing.
So that's really been the focus.
Yeah.
And then it's been kind of nice. I mean, I've talked to a lot of guys I haven't talked to in a couple of years. I feel like our industry, everyone's just been so busy, right? It's nice to kind of just reconnect and compare notes with guys. What are you seeing? Because we certainly, aren't we're not seeing everything there is to see, right? We're such a new company that we don't own 1 million square foot building. We don't, we don't have the tenant base that some of our competitors have. So talking to them about what they're seeing on that side, has been really helpful. So, it's as much as I'd love to say we have 15 deals under contract, and we're the day-to-day has changed a little bit.
Well, I mean, the hard thing about it is it's really difficult to underwrite deals.
It's hard
right now.
Yeah.
Really difficult.
Yeah.
I mean, would you say that's the number one topic in most investment committees right now?
Yeah, I absolutely. I mean, it's really hard to be convicted on what is value today because the capital markets are so turbulent still. Yeah. And I think development especially is challenging.
Yeah.
We have sensitized our models a lot lately from some of the land sites that we do have under contract.
Yeah.
And look, I mean, if rents fall 15%, it's the equivalent of cap rates going up 75 bips. So your returns, I mean, it's sensitive. They fall off a cliff, right?
Yeah.
And to me, there might be some people listening to this that if rents are going down, they're going to stay, they might not go up 50%, but they're not going to go down. And I tend to disagree with that narrative a little bit.
Okay.
And not because of supply. We don't have an oversupply problem, at least in the tier 1 markets, right? Like IE is 0.5% vacant.
Right.
But what I do think is there's going to be a fear factor, meaning guys that are delivering buildings today bought that land 2-3 years ago.
Right.
The underwrote rents half of what they are today, right? So if they can get a deal done, secure occupancy with a good credit tenant at $1.50 instead of $1.80, it's still a home run for them.
Right.
But it screws the new guy coming in trying to buy land because they were underwriting the $1.80 because that was market. So now the $1.50 is the new market.
Yes.
Right? And if you start to see that, it's the new guy coming in buying land is they're in trouble. So then the question is, if you are going to buy land,
Yeah.
how quickly can you put the shovel in the ground?
Right.
Right.
Yeah.
Hopefully it's quick.
Yeah.
And you need to buy it at a land basis that's pretty durable and has insulation from some, rents going down. So what we've been doing is we've really been sensitizing rent.
And what do you mean by that?
So we've been taking rent today that we and then we say, okay, what happens if it goes down 10%, 15%, 20%?
And why don't you fill our audience in on what you used to do when you were looking at today rent? Usually the question was,
the question, how much is it going to grow?
What are we going to grow it to?
Right. Yeah. Exactly. And not only are you growing it, you're kind of pushing the envelope on what your baseline rent was in the first place. Right.
Yeah.
So, I mean, we're IRR buyers, so we are most concerned with our overall return.
Yeah.
And if we're developing to, let's say, somewhere in the high teens, you move rent 15%, and you're now like in the 11-12% kind of overall return, which to us is a big deal. I mean, we make our money over a certain threshold, right? So
I mean, I think your analogy about when the developer bought the dirt, what they were originally underwriting, what they thought they maybe were going to get 6 months ago looking forward, and what they're actually going to get.
Yeah.
Our company is running with 3 or 4 tenant rep requirements right now in like the 1 to 200,000 square foot range. And we talked about it as a team yesterday. Mm-hmm. This is the first time in years I've actively had multiple leasing agents for multiple new construction developments following up with me multiple times.
That's really interesting.
When are you going to offer? How can I get you through on a tour?
Yeah.
I'm not going to say all of them are using the M word, but I've gotten motivated a couple times
in
writing, in email.
It's happening. My question would be the listing brokers that are following up with you, how tenured are they?
Very.
They're the older guys, right?
Yeah.
Yeah. I mean, I think.
Or it's the younger guy on a tenured team.
That's getting direction
who's being tasked to do that.
I mean, it's
basically exactly what you said.
Right.
Right. And this wasn't in writing, but the writing on the wall is, I mean, there's even, not to get super insular and micro in this interview, but there's a deal for about 1 to 200,000 square feet in the West.
Yeah.
And it's a newer construction
building.
There's
a lot of options right now.
It's owned by a private guy.
Yeah.
It's a very, very public fact.
Right.
He wants the next deal.
Right.
He's a guy, and
he's willing to,
and it's even being put out there that he's not an institution, and he's not the common cast of characters. He wants the next deal. It's not doesn't take rocket science to figure out what his basis is.
Right.
He wants the next deal, and he's still going to kill it.
Cents, and instead of $1.80, he'll do $1.40, $1.50.
Right.
And he looks like a hero because he just leased it at 50% above the underwrote.
Right.
Yeah.
Which is going to be like the domino effect has not occurred yet, and I think it's going to take multiple months. But as a company and a team that does a lot of capital markets with bridge logistics properties and also a lot of tenant rep, we're still crafting our story to tenants.
Right.
Because I don't think we want to start dumping water over the side, because then if it twists and you have to pay asking price, what are we supposed to do? So we're trying to present an educated, informed opinion.
Yeah.
And the best way to do that is, here's the inventory, here's the asking prices, here's our opinion.
Right.
Right.
Yeah. Well, here's $1 million question for you.
Okay.
Okay, so obviously the capital markets are very turbulent.
Yeah.
That shoe's kind of dropped.
Yeah.
The next shoe to drop, or I guess the shoe that we all hope doesn't drop, but it sure seems inevitable to drop to some degree, is the demand side.
Right.
Have you seen a fracturing of tenant demand at all?
I've seen tenants slowing a little bit. A lot of the interviews, clients, phone calls we've been having, a lot have been about renewals. So that's a lot of the lens that we've been looking through.
Right.
I would say through our lens of new tenant rep requirements, we're not seeing as much demand as we were previously.
Yeah.
But I also read reports like other people do, and they're saying that Christmas shopping is going to be 6% higher than last year.
Right.
So I'm trying to put 2 and 2 together.
Whole dollar wise?
Yes.
So,
but commodity type, the article was it's going to be less gifts and more have-to-haves, which so finding that category I think is tough, because there's a lot of things my wife says that she has to have.
Yeah. No.
So, you know what I mean?
It's like we're married to the same person.
So the requirements that we're working with right now, the sentiment from the guys that are making the decisions on those, they're being a little more patient. Right. We've delivered responses from landlords 1, 2, 3 months ago that were astronomical.
Right.
They were. I'll give you the story. The math that we got from an institutional landlord when we submitted for a renewal, the renewal doesn't expire until Q1 of 2023. We wanted to get 6-9 months ahead of it. Right. When we received the first counter back from the landlord, number one, the number was astronomical.
Right.
Number two, the annual escalations were 5%. Right. Number three, they were kind enough to let us know where the math was coming from.
Right.
And where the math was coming from is we were 6-9 months ahead of the expiration. They were underwriting 6 to 9% of quarterly appreciation
right.
to rent. So they were guessing what rent was going to be by the time the new lease hit, and so that's where the number was. And it was, I mean, we're literally talking about 2.5 times
right.
what they're currently paying.
Right.
So when we first delivered that message to our tenants, obviously that's not going to go well. One of our tenants said, we'll wait and see.
Right.
We gave them the exact opposite instruction.
Yeah.
We said, I wouldn't wait and see. If I were you, I would pick a number that's 10 cents below that.
Right.
And let's try our best. And they said, no, we're going to wait and see. I would have thought that was a mistake 2-3 months ago. I still don't know if it is a mistake.
Right.
Because the landlord. I think the landlord might be willing to take a risk.
Right.
I think the bigger question we have for tenants, because we're working on a deal outside of the Inland Empire, more in like the mid-counties area. Another question is, the tenants don't really talk about, is difference in operating expenses.
Yeah.
There's a push on base rate, right? But a lot of the inventory you may relocate to in Fontana, 5, 10, 15, 20 cents higher on operating expenses
right.
versus if you're in a legacy building in mid-county. So it's not as easy as saying, well, let's just move. Because once you calculate the all-in, I think a lot of the tenants that are in space and they're still functioning, I think they're going to end up paying the rate, relatively speaking.
I think they do. I mean, because of transportation costs.
Yeah.
Right? Like if you look at kind of, if you dissect tenants like a trucking company's P&L.
Yeah.
I think transportation costs of that's about 50%. So, rent's around 6%.
I also feel like, and that we've always found this to be the case with distribution tenants that are heavily invested in racking, what they're doing for their clients, et cetera.
Right.
I think most tenants are very hesitant to admit what moving costs are if they're already heavily invested in that facility.
Right.
When it comes to racking, when it comes to labor, we haven't even really talked about that. So,
I mean, this conversation is very like 2008, 9, 10-esque, right?
Yeah.
Where, what if we start seeing like moving allowances again? Remember when we had those?
Oh yeah. In 2016 we got a great one.
Yeah.
We got a great one. In 2016 we got a moving allowance, we got early occupancy, we got free rent, and I didn't even have to wait for first half, second half commission.
Right.
I got the whole thing. Like 2 days after we signed.
Right.
I don't even know if the check cleared from the tenant.
Right.
So,
it's we're in an interesting moment. I mean, just hearing your conversation about and your comments on, tenants, putting stuff on hold, doing deals, etc. I mean, it sounds like if they have to do it, like they have a lease expiring, they have to do a deal, then they will. But from what I've seen, a lot of the expansions are kind of put on hold, kind of wait to see which way the wind blows, right? Like the deals that are, maybe not as necessary, I think are at risk of not happening now.
Yeah, I mean, I think we've definitely seen that with expansions, but I mean, I don't know if I would call a distribution center like mission critical, but depending if you're a small to mid-sized business in 140,000 square feet, right, that's a mission critical facility for that business, and it just doesn't make sense to move it. And then you brought this up earlier in our conversation, even with this potential softening of some of the new construction in like the west or the central or the east of the Inland Empire, there's not that much savings, relatively speaking, going from one of these markets to another. So you're going to go through that entire dog and pony show to save 12 cents?
Yeah.
When everything's said and done, if their operating expenses are higher, yours were lower, et cetera.
Yeah.
And so I think one thing we try to do as brokers is just provide very transparent answers.
Yeah.
Right? We don't want to be accused of hiding anything. We don't want to be accused of pushing a new deal because we're getting paid less on a renewal, et cetera. We're trying to just give as much information as possible.
Mm-hmm.
That's the fiduciary right to the tenant. But at the same time, half the tenants think we've been liars for the last 3 years.
Yeah.
Right?
Yeah.
So I don't want to start ringing the bell and saying that there's softening in the market, but I do want to say, here's the inventory report.
Yeah.
There's 10 buildings between 100 to 300,000 square feet in Fontana right now for lease.
I mean, then that's a conversation that we haven't had to have.
No.
Right? And on the development side and on the tenant broker side,
Yes.
it's like, well, you actually have some options now.
Correct.
Right? And if you're building a building, you actually have a competitive set to think about now.
Is that back like
right?
in like, remember like 08, 09 when tours would take like 2 days? You had to, when you had to like tour.
Basically needed a helicopter to see everything.
All right. One of the most discussed topics is iOS,
Right.
industrial outdoor storage.
Yep.
Everyone's talking about it, right? I've done a couple posts about it where there's literally billions of dollars being allocated right now that haven't been placed.
Right.
And so, you and I have talked about this already, and I've kind of put it out there on some of my pages. I personally feel that the dirty little secret that no one's really willing to admit, and I know that you agree with this, is that one, these deals are really, really hard to underwrite.
Mm-hmm.
And two, it's really hard to pick what rent you're going to apply. I maintain, and I really want your opinion on this, but I maintain one of the biggest reasons behind it is there is no 2 yards that are the same.
Right.
That pallet yard is completely different than that truck yard. That
Yep.
truck yard is completely different than that truck terminal yard, right? This rebar yard is completely different than this yard that you're talking about. And so when you're going after and pursuing a development site, I feel like there's a very, very set detailed checklist that you and your team can go through when you're assessing raw land, partially improved. We're talking about offsites. I mean, you have a checklist, Paul, when you're going through development sites. I don't really feel like there's a truly effective checklist out there to compare this iOS to this iOS. I mean, there's two different terms for iOS.
Mm-hmm.
There's ISF and there's iOS. They're all kind of lumped together.
Mm-hmm.
So you and I have had this conversation a number of times, but I mean, I would ask you, one, what do you think one of the most difficult things about underwriting and trying to acquire iOS is, right? And two, what are certain things that people aren't even thinking about, right? Or maybe they're missing or they're not talking about when they're going through that process?
Yeah, I mean, that space has evolved a lot over the last couple of years. I mean, there's funds now that are being raised dedicated to iOS.
Yes.
Right?
Yes.
And historically, I mean, going back a few years, the metric was always, okay, I have optionality with this site. I can do outdoor storage. I can build a building.
Mm-hmm.
And the value never really strayed too far north of what you consider to be land value.
Right.
Right?
Right.
Now, iOS is now a product type of itself.
Yeah.
Right? And if a lot of the values that have been, kind of put out there on these sites, you forego the option to do development on those sites, right?
Mm-hmm.
And a lot of the sites that guys are buying aren't even functional development sites.
Yeah.
Right? So the challenging thing about it is a lot of the information is in a black box,
Mm-hmm.
right? The guys that really focus on outdoor storage terminals and they're doing it across the country, they don't like sharing information, right? Per door rents, all that. And it makes it very difficult to underwrite. And you're kind of like this. And to your point, each site is different, right? Like a 2-acre site that leases at some big number isn't necessarily the same number you're going to get on a 10-acre site.
Right.
But a lot of times those comps are, kind of put out there in the ether, especially in the brokerage world where it's like, oh, this site leased at 65 cents and so this one must be 65 cents. Well, it's like, well, that one's a perfect square, has multiple access points, is in a much better location, but it's 15 acres, right? The other challenging thing with it is, unlike commodity warehouses where there's a defined kind of class A state-of-the-art features, 36-foot clear, 40-foot clear, whatever, ESFR, you know what I'm saying, 185 truck port. For yards that doesn't really exist, right? And if it does, there's not a lot of people that really know what they're talking about or know the vernacular. I mean, it's, yards and terminals are a very strategic part of a company's supply chain.
Mm-hmm.
They don't need a ton of them. Mm-hmm. Location matters a lot. Functionality matters a lot. And so the challenge is you'll get, guys kind of slinging you land yard sites, whatever, in tertiary parts of the market,
mm-hmm.
right? Not by freeways, not by population nodes, but it's zoned correctly,
Yeah.
right? And that, to me, I think there's guys that will or have been stung by that,
mm-hmm.
Where they're like, wait a minute, I thought you said rent was 50 cents. Why am I getting offers at either no offers at all, or why am I getting 30-cent rents, right?
Yeah.
And it's because the guys that are trying to sell this stuff, not all of them understand how it fits into a company's strategic supply chain
mm-hmm.
and why,
mm-hmm.
right? There's I can think of a couple sites that have sat for a lot longer than you would think,
Yeah.
and they have the bells and whistles,
Mm-hmm.
but they're in the wrong location. You
Yeah.
can't take a site in the South Bay and be like, Orange County is the same.
Right. And apply a discount and say
Yeah,
it's going to be.
I mean, in a way, on
Yeah.
that stuff, and people listening to this might blow me up and tell me what an idiot I am. It's fine, but to me, it's kind of bypassed Orange County, right?
Yeah.
Like you either need a yard
Right.
in LA or the
Yeah.
South Bay,
Yeah.
or you have something out in the IE.
Yeah.
Like there hasn't been a ton of outdoor storage requirements or outdoor storage,
Yeah.
yards that have
Of
been
decent size.
of decent size
Right.
that have been super successful. I can count a couple of them,
Right.
obviously.
Right.
But it's almost like that science. There needs to be more of a science applied to it, and a lot of people don't understand the science.
Yeah.
And I'm by no means an expert on it either, right? Like when we did our when we did our terminal, I mean, I learned a lot through that process of talking to guys, understanding, location. Does this fit into a lot of companies' supply chains? Like,
Yeah.
are they like, do the features of this building, is it really a Class A terminal? It looks like Class A terminal,
Yeah.
right? But there's a lot of things that I've kind of learned through that process, like
Right.
vernacular and kind of the reasons why a tenant views it as functional,
Yeah.
that I didn't necessarily know before, right? And so it's been a really interesting kind of learning experience doing that during that deal with
Yeah.
you. So.
I've personally learned, which groups may not be willing to admit, is I think the majority of the time, anytime someone looks at an iOS site, they're secretly hoping it turns into truck parking.
Yeah.
And that's not always a guarantee
Right.
that one, it will be allowed, or two, you're going to get anywhere close to that. And if you're not getting those first two things,
Yeah.
the rent is different,
Right.
right? The rent is different for a rebar yard or a pallet yard or just a, equipment storage and rental company.
Yeah, no
I mean,
question.
more and more of these, there's like these conflicting things going on right now. There's
Right.
more and more interest in iOS, and there's more and more cities saying we don't want it.
Right. And you better be right. I mean, if you underwrite a yard and you start playing with what your rent assumption is just
Yeah.
a little bit,
Yeah.
it is highly sensitive.
Yeah.
Like I'm talking you missed by 2 cents. Doesn't feel like a big deal. Your returns are meaningfully, compressed.
Yeah.
When you
Well, for the most part, you're basing that 2 cents on
nickel,
the land square
the
footage.
land square footage, right? Exactly. So it that scares me a bit. And the other dynamic that we've seen in LA is it is more profitable. You can generate more NOI by not building a building and just leasing it out as trailer storage than you can by building a building.
Yeah.
So land rents in LA, I don't know if it's still the case, but earlier in the year when things are going crazy and you had the port congestion and all
Right,
that, I mean,
right.
guys were telling you, okay, land rent's $1.20, $1.25 a land foot. But there wasn't a Class A building comp that was, that much north of $2.
Right.
So if I can get $1.20
Times two. Yeah.
assuming 50%
Yeah.
FAR
Yeah.
for land, and I
Yeah.
don't need to spend the money,
Right.
that's a no-brainer. But I
Right.
just don't think it's sustainable. Like,
Yeah.
I think that if you look at the risk spectrum, having a Class A nice building, highly functional in LA,
Yeah.
to me, should be yielding a better or what I'm trying to say, I guess that's a safer bet,
Yeah.
right, in the long
Yeah.
term, because
Yeah.
you don't know, were those rents being generated because of the port congestion and all that? Well, working
Yeah.
itself out.
Yeah.
So is that still the case? I don't know. And like I said, if you miss,
Yeah.
you're in big trouble.
Yeah.
And you just paid a lot more for that land
For sure.
than land value, so you
Yes.
can't even develop it anymore. So
Yeah.
what do you do now?
Yeah.
And I think that we've strayed away from that just because it felt very frothy.
I almost felt, not that we invented it or anything, but like we started trying to do iOS in 2019, and it was like by accident.
Right.
We basically were trying to do land assemblages. We
Yeah.
were trying to do multiple 2 to 2.5 acre land assemblages to get to 8 to 10 acres
Right.
on those little pieces in like the SWIP and Fontana and stuff.
Yeah.
And so we got the first. We tried to get the second to the north.
Right.
He didn't want to sell. We were like, well, we still got to make a fee, guys. What are we going to do?
Right.
And so we started looking at a metal building, started looking at slag roll, partially paved, that curb cut, et cetera. And then luckily the owner user was willing to close down. His business had a CUP that could be transferable, right? So we were like, I mean, what can we lease this for? And even then, trying to get iOS to sell for land value
Right.
was tough, right? You almost kind of want to do it a little bit of discount because it was narrow and you can't build on it.
Right.
So you got to do it as a yard. But I agree with your LA comment. I think with a brand new building, I think the depth and breadth of your future tenant pool
Yeah.
is much deeper than only trying to be the yard
Yeah.
for that
No,
tenant.
you
moving
nailed
forward.
it. I mean, the depth of demand for yards, especially large, sizable facilities, isn't very deep, right? There's the logicals. But then once those chess pieces are kind of placed,
Yeah.
it's like, do you really need another one? You know what I mean?
Well, it's also small property, small credit.
Yeah.
Extremely,
oftentimes.
extremely hard
Yeah.
to get decent
But
minimum
like,
credit.
but then I mean, like FedEx, for example.
Yeah.
FedEx was pretty active in the yard space,
Yeah.
you know, in SoCal a couple years ago. And I feel like they've been, you know, I could be wrong, but I feel like they're not as active, right? To me, it's almost like they placed their chips already,
Right.
you know?
Right.
So I don't know. The other thing on that is if you look at exit, so if you're a buyer that is IRR driven
Right.
and will exit,
Yeah.
if you're buying land for, you know, $250-ish a land foot, I know that's not the case anymore, but it was.
Yeah. Yeah.
And your strategy is to
Lease
keep
it
it
and
as
get
a
out.
yard, lease
Yeah.
it as a yard.
Right.
First of all, what's your exit cap? Like,
Right.
what is that spread
Right.
between commodity
Right.
and yard?
Right.
And you throw even if you thought it was 100 basis points, right? Which it's not.
Yeah.
It's tighter than that. But even if
Yeah.
it was, and you throw a 4.5, 5 cap on $1.25 land rents,
Yeah.
I mean, you're pushing, you know, multiple hundreds of dollars a land foot. I mean, if you're going at 250, you're at least 600, 650 bucks a land foot. Like, who's gonna buy that? Like, what is your exit there? And that,
Yeah.
and I think that's another. I mean, that leads me into kind of a new topic is liquidity matters, right?
Yeah.
Like,
Yeah.
you actually need to think about who is your buyer for this, right?
Right.
Not just on yards, but on buildings now too.
Yeah.
And you start looking at where you need to exit on some of these things.
Well, I mean, you and I have looked at some deals 2 years ago, a year ago, and then they ended up trading. And you know what we were looking at 18 months ago on a forward or
Yeah.
trying to get it off market. You know, no way it sells for that number, and then it sells for more than that number. So there definitely are some comps that
That's
have
true.
spoiled some
I've been
people.
wrong for a long
No,
time.
I'm just saying there's comps that have spoiled some people, so it's not going to be that surprising if someone thinks that.
No.
But I totally understand
Yeah.
what you're trying to say. It's
I
a
know.
heck of a lot
Eh.
easier to tell that story on a stabilized building
Totally.
than a stabilized yard.
It is. And every time I've said, okay, well, basis matters, right?
Yeah.
I've been proven wrong.
Yeah.
But what I do know is that you start talking about $700-800 a foot.
Yeah.
That's awfully close to what I could
Yeah.
sell my house for. And so
Yeah.
it starts
Yeah.
to feel
Yeah.
a little skewed. But
Yeah. But then again, what I bought my house for, warehouses in Chino have been selling for double that for like God knows how long. So, what are you most concerned about going in to 2023?
The capital markets. You know, I think the fundamentals are fine.
Yeah.
And look, we're sub 1% vacant in most of the tier ones. So I really don't think we're gonna have a supply issue in the tier ones. Like, there's some markets that, you know, are a little secondary, or, you know, that have experienced a huge uptick in construction. That might be, you know,
Yeah.
in trouble, a little softer.
Yeah.
But in the tier ones, I mean, we're land constrained. Municipalities are getting more and more combative. You know, I I truly don't think we're going to have a supply issue. I mean, if in the IE, if 30 million feet's under construction, half of it's pre-leased. If there's not one more lease done, you're only at 2.5% vacant.
Yeah.
In 2009, we were 9% vacant.
Yeah.
So I don't think that's the issue. I think it's all capital markets. And until the capital markets stabilize, so, equity partners giving money again because they have confidence that, the knife has fallen.
Yeah.
Lenders, kind of thawing out and deploying money again. I think we're going to experience kind of some stagflation here. Not a lot's going to happen. So, what is my biggest concern is probably interest rates. And what that translates to as far as cap rates and risk return spreads in our world. I think that's just time though, because you can quantify that, right? Like if interest rates, the Fed goes up another 75 bips in November and they keep doing that. I mean, at some point, interest rates are interest rates and cap rates will get adjusted accordingly. And then at least you can quantify what you can pay for something. Yeah. You just can't quantify what you can pay for something now.
Yeah.
So everyone's just kind of frozen.
I mean, how do you guys underwrite deals now? I mean, as I understand it, most of the major banks are not lending.
They're not.
Or they're limited in what they're lending on.
Yeah.
And so when you guys have internal discussions and you see deals or deals are still coming to you, are you guys looking through the lens of we're still focused on tier 1 markets? So if it checks out, if we're underwriting honestly to each other, this is still something that's worth buying? Or are you guys having internal discussions saying, not that we want to take a break until after Christmas, but is it going to get that much worse? Don't we want to wait to buy until January?
I mean, the question is, can you even get debt?
Right.
And look, we're a private equity firm. We rely heavily on leverage.
Right.
And if you can't get leverage, it definitely changes the story. It definitely changes the strategy. It's going to make it very difficult to get deals, right? And the lenders that are out there, I feel like they're trying to be very opportunistic and kind of capitalize on the moment where spreads, even though, SOFR and, everything's gone up a lot, spreads haven't come in. Yeah. So they're keeping a high spread, right? So you look at, a high 300-400 basis points of spread above a SOFR. I mean, you're now in the 7% interest rates. Yeah. And versus a, 4% cap rate, I'll call it kind of core cap rates in SoCal, probably hovering around 4, low 4, something like that. I mean, you're 300 basis points of negative leverage.
So what lens do you guys look through when you're looking at deals now?
I think that this construct that still works best is quick mark to market.
Okay.
Right? So, going in at a defensible, durable basis.
Yeah.
Tenant, rolls in the next year or two. And you can have a quick mark to market to generate your stabilized yield. Yeah. But that stabilized yield, I mean, it needs to be healthy, right? Like, and you're still banking on rent growth. But I think that if you can get up to a decent stabilized yield in 24, maybe at the most now 36, maybe. And your debt yields and your debt coverage is something we haven't talked about in a long time, but that's like one of the main metrics now. Yeah. If you can get up to decent numbers on that stuff, then I think you can there's still lenders in the market for that. At least there were 30 days ago. Yeah. It's moving so fast. It's really hard to even know what plays. Yeah. And I think if you talk to a lot of the capital markets brokers, etc. A lot of the interest they're getting is obviously from unlevered buyers and a lot of exchange buyers. Right. And exchange buyers, they have a gun to their head. They have to do something. Right. And now instead of having to go buy a Starbucks in Wichita, they're actually able to get their hands on some industrial assets and at
a slightly better yield.
But they're stepping up in location. Right. So it's I feel like every day it's getting a little bit harder. Right. Until we have stabilization, it's just so hard to price risk.
So, as a broker that's been fortunate enough to do a number of deals with you, what would you say the biggest mistake is that a broker makes when they present you a deal, try to do a deal with you, try to get a deal done, etc.?
Brokers have always been right. The last couple of years, I've been the one that's wrong.
Yeah.
Right? Like, they'll come and say, here's the guidance, and be like, absolutely not. You're an idiot.
Yeah.
I've been the idiot. They've been right every time.
Right.
And honestly, I mean, I think a benefit of working with us is I don't need much. I don't need my handheld.
Yeah.
I need an address
Right.
and, maybe some guidance that the seller gave you.
Right.
I can figure out everything else.
Yeah.
That being said, now in this environment, I think having, kind of more substance to why you think it's a good investment right now, right? Like, what's going on with the tenant? What's the tenant credit profile?
Right.
Where do you think market rents truly are? What were rents a year and a half ago? Right? Like, give me some goalposts.
Yeah.
Yeah. If everyone's going to be very selective, the days of here's the building, go buy it, here's the price.
Yeah.
I feel
Need your
like
offer on Thursday.
Yeah.
Yeah.
And it's funny too. I mean, depending on the profile of deal, if there's some kind of strategy that you need to execute on, especially a leasing strategy,
Right.
who's the broker bringing it to you?
Yeah.
Right?
Yeah.
And are they the right person to lease that building?
Yeah.
And I was having a conversation with, just a friend who we've done a lot of deals together, known each other a long time, and we were kind of laughing because we're back, I think, to a time where you need to work your listings.
Right.
I think you said earlier, followed up with you on your prospect.
Yeah.
When is your requirement? How real is it?
Right.
What can we do to make a deal?
Yeah.
Maybe we're back to having to, have an open house or something. I don't know. I mean, we've been away from that for so long, but
time.
you need
Yeah.
to, if there's a limited amount of deals in the market, even though the supply is, minuscule,
Right.
you still need to outlease the competition. You still need to outlease that one or two buildings.
Yeah.
Right? And we're back to that. And the days of just set up your spider web and let something fly into it and you look like a genius because the rents are higher than you said they were.
Yeah.
I think are over.
Yeah.
So you need that experience. And the reason I asked on, when you were mentioning that brokers were following up with you, what the tenure of those brokers was, is because the younger guys in our business, no offense to them, they've never had to do that.
Right.
They don't know what that means.
Right.
They don't know what it's like to have to sit on a listing for 9 months a year and explain to institutional owners why their building's not leased.
Yeah.
Right?
Yeah.
And so I do think that, like, we're back to wanting it, at least for us, like, who's going to be responsible for leasing your investment? Who's going to be your partner in protecting, your capital in that deal? So, I mean, not that I need a lot of information from guys who send me deals, but if nothing else,
But when you
it
look at
makes
the
yourself look smart, like
Right.
what you're doing. And
Right.
if we have to execute on a strategy, I have confidence that,
Right.
okay, you can execute on this. You are in tune with what's going on,
Yeah.
right?
Yeah.
And, on the capital side, I don't know that there's very many brokers that truly understand how bad it is in the capital markets right now. I mean, it's frozen,
Yeah.
I
mean, the deals that we've been pursuing and chasing and also working on, I mean, the anecdote that I'll give you is it was a deal that we had been pursuing. We were not the highest. We were representing the buyer, someone else representing the seller. We were not the highest.
Yeah.
But I think this was about 3.5, 4 weeks ago. We did paint the proper picture that debt volatility had been underwritten. We were coming in lower because we underwrote it, and then right when we got chosen, a new blip came out.
Right.
We had to go back to the seller and we had to say, "Here's the deal. We want to be transparent." We'd already signed the LOI at a number.
Right.
We basically came back to him with a $3 million haircut
Right.
and said, "This is underwritten with this debt blip and the next one. We know there's another one coming."
Right.
Well, then we had to call him back again.
That's,
And like the numbers flipped.
Right.
Like it was supposed to be like 65 and then it was like 56.
right.
Yeah.
Well, the knife keeps falling, right?
Yeah.
It's hard to predict and gauge where that bottom is.
Yeah. So we're in a really interesting time right now, and you already spoke to it a lot, but for any young broker that's watching this, I mean, what's the best piece of advice you could give he or she about what they can be doing, I would probably say right now, but what they should plan to do the next 12 months to either set themselves apart or to be successful, or a combination of both? I mean, what piece of advice, because you've been through both, right? You've been a young broker in the recession.
Mm-hmm.
You've been on the principal side through it doing this,
right?
You've been on the principal side with it doing like this, skyrocketing. And now you have to think like a principal when it's completely uncertain, when you need competent brokers, not only bringing you deals, but like you were talking about before, you appreciate someone bringing a business plan to you.
Yeah.
It's not a tear sheet, right? Now, I found you the deal, but my team and I think this is what the next plan is going to be for this property to get, because I know where Paul wants to go.
Mm-hmm.
So if you're a young broker and you've never experienced any volatility, like, what piece of advice would you give them?
I mean, work your ass off and don't look up for 10 years, right? Like, I think that a lot, not to generalize,
Mm-hmm.
right? Because there's a lot of young people that come into the business that are extremely smart and work their butts off and don't expect anything, right? They want to earn everything, which I have crazy respect for. But there's also a group that doesn't really want to work all that hard.
Mm-hmm.
Don't want to like roll up their sleeves and kind of handle the adversity, and they feel like they should be handed something.
Right.
I don't know. I think that maybe I'm a little old school in that aspect, where it's, you know, I credit a lot of people in my career as far as mentors and things like that.
Mm-hmm.
I mean, it's a team sport, right? And I wouldn't be sitting and talking to you if it wasn't for some people that, you know, really invested a lot of time with me over the years. But I think you need to make people want to invest in you. Why should they spend their time investing in helping you, right? And I think it's because people respect hungry people that work hard, don't have an ego, don't really expect anything, right? And want to earn what kind of earn their way, right? And it's actually really hard to find these days, I feel, with, you know, younger people. So not to make myself sound super old or anything, but I don't know. What do you think? You see that?
One, I completely agree with you. Two, I actually think it's really hard to be young right now. I actually think it's really hard to be a young person thinking you want to be a professional, and being a professional. And I've thought about this a lot because I have young guys on our team that I manage, and I'm grateful for them because I think they're a little bit different and cut from a good cloth. But if I was young right now, I don't think I'd know what to do with myself, because there's no one shouting from the rooftops, it took me 12 years and I'm finally here.
Right.
There's no one getting all the attention on social media or the internet or what have you that basically says, I can't believe I finally made it at 43. There's no one doing that. So most young people, and this is not like a bash fest, but I did ask the question, most young people have never been forced to make a business plan and then it fail and then still figure it out.
Right.
And I think that's why it's actually really, really hard to be young right now, is because I think there's way more exposure on what the success is, right? Versus what the process is. I know a lot of guys online talk about that, but I think it's really hard to be young.
It is. And it'd be hard to come into the business now being young, because everyone's, you know, a lot of guys have been making a lot of money. And it's been, not to diminish effort, but I mean, it feels like it's been kind of easy, right? Like rents have, the amount of work a broker's had to do is essentially the same, right? Over the last few years.
Right.
But the amount of money they're making, the fees have gone up exponentially because the rents have gone up so much.
And the percentages.
So you're doing the same job. You're making 3 times as much. And I would even make the argument that your job became easier because you have one option.
Right.
You don't need to go tour 10 buildings. You don't need to, you know, to your point, spend 2 days touring the market. Right. So, you know, I guess the flip side of that, maybe it's become harder where you need to be in tune with the market and know shadow space and things like that. But I don't know, you know, so I think being young and seeing that, like, the money kind of came easy,
Yeah.
right? It would be hard to kind of, blind that out
For sure.
and say, okay, I want to learn as much as I can.
Yeah.
I want to work really hard. And I want to understand the basics of the business.
Yeah.
And I think the other advice I would give, and I'm sure that my counterparts at other, institutions and all that would feel the same.
Yeah.
Don't be scared to give out information, right? And even if you don't stand to gain anything from that, if I call and say, hey, I saw you lease this building, I'm, kind of tracking and looking to buy a building around there, like, tell me about the depth of tenant demand you saw. What, is there anything weird about that rent? Was it, was there any extra TI in there? Whatever.
Yeah.
Don't be scared to divulge the info, unless obviously you can for some reason. But
Yeah.
Because the fact that guys from institutions are calling you, it means that you're on their list. They trust you, right? Like, you're building credibility, and you don't know when those relationships are gonna, yield some fruit, right? You're planting seeds in the field. You're gonna harvest that field. And we, like you said earlier, we've been friends and talked about deals a long time. We haven't actually done a deal, for maybe it took 5 years or 10 years.
Took a long time.
Whatever it was.
Yeah.
But it's you're kind of hard. You're planting seeds for later.
For sure.
And I think that the more you can interface with guys, even if they're younger analysts, those younger analysts are going to grow up to be deal people, right? And so it's a process, and it takes a lot of time. And but the more information you give, the more they trust you.
I think that's the best part of our interview today, like without a doubt. I think that piece of information is extremely, extremely valuable. I mean, the story I still tell my guys is in 2015, I saw all these guys starting to make money on dirt.
Right.
I'd already been selling buildings. I'd already been leasing buildings. I was determined to do development deals. And so 2015 was a very, very hard year for me because I solely focused on dirt and I didn't sell an acre.
Right.
But I look back on that year, which is when I think you and I first met, and I was literally making boards, glossy boards.
I remember those boards.
Chino in South Ontario.
By the Chino Airport.
That's right.
I remember the boards.
And I was literally like a traveling salesman without the hat.
You were.
And so my goal was two things. I didn't know you guys.
Right.
Right? And so my goal was if I could bring you information that you didn't already have and I could be a resource, I probably gave myself too much credit that I was going to convince you to pay $11 on a dairy farm, but when the price was like $4 or something. But that was the hardest, best year of my life.
Yeah.
And I credit a large majority of the first major institutional relationships that I built because I came to you guys' office and I just gave information. Gave information. Now, the goal of that information was to get you to buy something.
Right.
But at the same time, I think that's one of the best parts of our time together today is I think because young people have been able to associate wins with money pretty quickly in this market, that they've lost the meaning of what the win is when you're early in this career.
Right.
A lot of times the win is you did it for a month straight, right? You told yourself you were going to go knock on doors for a month straight and you did it.
Yeah.
And every single day you came back with a piece of information you didn't have the day before.
Right.
Right? A win could be, I got opportunity with Paul. Presented him a deal. He didn't say yes. He didn't buy it. But Paul's not going to say, who's this, when the phone picks up. He's going to recognize my phone number because I brought him something, gave him information, it was timely, etc.
Right.
So I 100% agree. I 100% agree.
Yeah, no, it's, trust is the utmost importance in anything, in any part of business, right? So the more you build on that, the better, I think, for younger guys. And, the other thing, and someone gave me this advice, and it really stuck with me, was as you're growing your career, grow horizontally first, and then go vertical, right? Like a pyramid. And what does that mean? It means, go learn leasing, then go do some development, and then go, buy some buildings. Figure out what you really like to do, and then grow your skill set vertically. But if your baseline, if you know all those skill sets, your stock price is just going to be that much higher. Because there's a lot of guys that can only lease, that can only develop, that can only buy buildings.
Right.
But being able to do all three makes you super dynamic, and it makes you so much better.
Yeah.
It just makes you a better investor and more valuable to wherever your career ends up going, right?
I have one last question for you, but do you have any questions for me?
Gosh. I guess my questions, I mean, obviously retrades and all that have been happening a lot right now.
Yeah.
What would your advice be to buyers on how best to approach that conversation? Because it's not an easy conversation, especially when your friends are close relationships with the ones that are selling you those opportunities. It's not a fun conversation to have on either side.
Yeah.
I think that generally people are starting to understand why.
Yeah.
But from your perspective, like what's the best approach?
Retrades, or I just can't pay that price. Like you're already in escrow.
Well,
or I'm sorry, you're already agreed to a price. You're in escrow.
I feel like everyone calls it a retrade, but
Okay.
Price reduction.
Yeah.
Yeah. You can't honor the price you agreed to.
Yeah, I mean, this is not always possible because of logistics, but I can tell you the deal that we just went through, man, I tried to be honest as quickly as I could.
Right.
And the fact of the matter is some of these sellers are smart enough, before you make that difficult phone call, they know it's coming. Right? It's never going to be an easy phone conversation. They may say pound sand. If I was going to deliver a retrade in this market and I still wanted to keep chances for the deal, I'd ask for a meeting. It's not that you want to take that responsibility out of the broker's hands, but it's the buyer and seller that are transacting. And if it's a land deal, if it's a building deal, etc. I mean, I personally, if I was a buyer in that situation, I know it's not always easy logistics wise. I would say I want to meet with that seller. I'd like to be in a room with him. He knows what's coming. He or she knows what's coming. I would explain it to them. I would say, look, I'm not trying to use debt as a scapegoat here, but to your point, we haven't really had a lot of debt service coverage conversations as it relates to LTV. Yes, I am an all-cash buyer, but I'm still going to use debt. Okay, this is why. You are completely free to go talk to any other buyer. It's like you and I just talked about information. I'd probably bring information to that seller meeting, and I would say, this is what we're seeing. This is what we're using. You could maybe get bit, you maybe not, etc. I would almost lean in towards the honesty part of it. As opposed to one of 7 deals you have to phone call today and say, oh, I can only pay 14 million or 25 million or 35 million, what have you. I don't know if the sellers are even going to give you that forum, but you never know with these deals. And you of all people know this, 9 out of 10 are owner users of these deals we're buying. And a lot of them are multi-generational businesses. So I think the sellers would appreciate. I mean, I don't like making those phone conversations or those phone calls. That's one thing. And to be honest, I don't know if it's going to work. I have no idea if a seller's going to be receptive to that. But I think if you leave that situation and a seller at least respects you, because the seller just thinks you're a number, and we're to blame for that as brokers, because they're getting high per capita cold calls, and the cold call script is, I have an all cash institutional buyer who'd like to make you an offer. Right. This is why sellers don't like listings. Because they don't think they need them. That's through the entire market.
Well, they've been spoiled too. I mean, every week they get an offer that was higher than the next.
Correct.
And we're not there anymore.
Correct.
But I think it's great advice. I mean, so address it early, bring in information, you know, kind of the reason why, and a face-to-face meeting kind of goes to the trust thing.
That's why I'd never survive in residential. I can't deal with emotions. I can't deal with this. I don't want to buy this house because I don't like the configuration of this room. Our business is very black and white.
The backsplash is different.
That's right. That's right. It's very black and white. So my last question to you is, I think a lot of our conversation, we've been talking maybe about the negative, but BLP has been an amazing organization to McLeod & Co. It's been so awesome to do huge deals with you guys. It's been awesome to have a level of trust with you and Brian Gagne and Jay, and to have that relationship between companies when we're working on really crucial deals together has been awesome for me. My final question to you is, what are you guys excited about for 2023? We've been talking about all this negative stuff, all this, where are we going to go, how's it going to happen, et cetera. What are you as an organization, what are you guys excited about?
I'm glad it's a really great question, because you're right. I mean, everything has been pretty negative, not just in this conversation, just generally in our industry, right? I feel everyone's kind of in that like hangover stage, right? Where it's a hell of a party, but you know, now we got to clean up. Now we're paying the consequences. There's a lot to be excited about. I mean, at the end of the day, long term, our space is still the belle of the ball, right? The fundamentals are strong. The capital's going to come back. When you look at the different product types, like we're still, I guess industrial and multifamily are still two of the, it's the focus, right? So that's the good news. So investors and capital believe in the space long term.
Yeah.
I'm also really excited for, just our team and our growth.
Yeah.
In the year that we've been in business, we've hired about 33 people. We've opened 4 offices. Like, it's been just really cool to kind of create a culture, with people that we really like and respect, that, you want to go get a beer with, but also are very good at what they do. And that's been awesome. So that will continue. And then, we've aligned ourselves with some really great partners, on the capital side, and to continue to foster those relationships and grow our fund and all of that. I'm excited for that because the prospects, it's shaping up really well.
Yeah.
And I think we're well positioned to capitalize on the opportunities when they present themselves. We're not burdened with 10 years of bad investments or whatever, right? Not all any land holdings or that we're going to get stuck with or whatever.
Yeah.
We're entrepreneurial, we're nimble. If there's a path to make money, we're going to listen. We don't have a lot of handcuffs on what we can and can't do. And so, figuring out how, we keep the ammo in the gun to strike when those opportunities present itself, over the next, 6 to 12 months, whatever, I think is exciting. And like I said, just kind of stepping back and saying, what is the right time to jump back in? Like, how do we be a thought leader? How do we avoid just being a follower in our space? What can we do? How can we be better? What, in our building designs, like, what's the future hold, right?
Yeah.
Like, how are we really creating a brand for ourselves, both to, in the brokerage community and also to our investors? Like, why is our mousetrap better?
Yeah.
And so we're spending a lot of time kind of thinking about that, and it's exciting. It's a really exciting thing to be a part of, and it's great to be doing it with, Brian and Jay, who have done this, a couple of times now, and just kind of learning from them. So it's been awesome, man.
Very cool.
Yeah,
I really appreciate all your time, man.
No, thanks for having me.
This was awesome, man.
All right,
Thank you so much.
Yeah, thank you.